Hello and welcome to Advanced Bookkeeping, the AAT Level 3 unit, and today, which is the last chapter, we're going to do AAT Professional Ethics, and we're also as well going to do the control accounts as well, the control accounts question, a bit of a brief overview of that one. So, as I said, this is the last chapter that we've got there. You've got 6 other before this, and we should be doing really well so far on our AAT Level 3 Advanced Bookkeeping. So what are the aims today? Well, we're going to go through professional ethics. So we're going to look at a quick look at the AAT Code of Practice, the key points within it, which are the fundamental principles of a professional ethics, the threats to ethics, and the safeguards to ethics as well. And that's what we're going to use in this this unit. When you get to the synoptic, you're going to need to look at the whole of the AAT Code of Practice and start to pull in things like money laundering and such like things like whistleblowing and what have you. So we're also then going to have a brief review of the control questions that are going to come on. Mainly this is going to be a regurgitation or rehash of the AAT bookkeeping controls at level 2. And then as we're going through this in the professional ethics, we'll have a brief overview of the professional bodies as well. Okay, so professional ethics, let's have a look at where this has come from really. So prior to 1870, we've got a general concept of accountancy because we've been carrying on with accountancy since 5th century Indian merchants invent it, and it's been codified in the 15th century by Venetian merchants. But we've now got into 1870 and we've got an accounting profession going on in the UK. And 5 accounting associations are sort of created and formed at that point. And their idea is to sort of raise the professional ethics of the sector. In 1880, they're combined into the Institute of Chartered Accountants of England and Wales. So what you would know as an ACA or an FCA if they've got a fellow status. So I'm an FCA. In 1904, the Association of Chartered Certified Accountants are formed, and their idea is that the Institute of Chartered Accountants of England and Wales is a bit too almost exclusive, really, to sort of prevent people getting into the sector. They want to widen it out, so they create their Association of Chartered Certified Accountants, so they're certified accountants. In 1919, SEMA are formed, and their idea is that there needs to be more management accountancy going on there, or more modern business techniques, so that's where they come from. And we keep going through. Things like SIPFA and what have you are created at that point, and we get to AAT, created in 1980. This is the Association of Accounting Technicians, and they're created from a merger of 2 subsidiaries from ACCA and SIPFA. Just as a quick overview of what is the difference almost between them all, really. A chartered accountant, so Institute of Chartered Accountants of England and Wales, or similarly in the Institute of Chartered Accountants of Scotland, they would have to be within a training organisation. So in order to be able to train with them, you have to be within a certified training organisation. You sign a contract to them, and then you can't really get out of that contract. So but that actually will be probably now similar under apprenticeship reforms to an apprenticeship actually now. So the previous big disadvantage of being an ACA, that training contract for 3 years that you couldn't get out of, is sort of going anyway when we now switch over to apprenticeships. And so you have to be within a training organisation, so hard to get into, and 15 exams. So 3 more exams than the ACCAs. So you can become an ACA after being an ACCA by doing a few more exams in there. Now, there is a bit of a myth here that an Institute of Chartered Accountancy member, an ACA, would be pretty much heavily audit. Actually, that's not necessarily the case. There would need to be an audit background, and that would be a particular specialism given the firms that they would be in. However, the Institute took a conscious decision a good 20 years ago that its ACAs were very much becoming finance directors within the FTSE 100. It was looking at what their members really became, and they were really becoming finance directors. And they made a very conscious decision to put a lot of business management techniques into the ACA or the Institute of Chartered Accountants curriculum. So it is really like a sort of SEMA plus kind of thing. So they've got the sort of the SEMA background in there, as well as all of the auditing that comes in as well. Now, the plus side of that is, yep, it's a really good qualification, and they're all good qualifications. And their downside is a bit harder, and that's that. So you got then the ACCAs, and they are you don't have to actually be in a training firm to get into them. although in reality you will want to be around a set of other accountants in any case, so it's sort of it's helpful to be in there. So there's not this training requirement. There are fewer exams in there, but still a good qualification, and they do have an audit background. SEMA are the management accountants. They are within industry, so if you were training within industry, in a finance department, rather than what's known as practice, you'd be going down the SEMA route, really, although you could go down ACCA. And AAT is the non-professional body. So all the way up to level 4, which would be effectively the first level of an accountancy degree, or the first year, and the other 3 are up to level 7, which is a master's degree equivalent. So that's where we are. Anyway, a quick overview, just as there tends to be a few misconceptions. So what's the reason for all of these professional bodies' existence? Well, the reason really is to raise the professional standards of their members. They've been incredibly successful in sort of creating this concept of what an accountant is and the standards to which they will be held to, and that in turn creates greater stability in the economy, and also as well a greater standing for the individual accountant. Also as well, they're trying to then create accountants that act in the public interest. So in terms of raising the professional standards, you have the qualifications, and the acting in the public interest, you have considerations like codes of professional ethics, and you also as well then have the disciplinary sort of side of the professional bodies, and also the AAT, non-professional bodies as well, that will act against their members, and if they step out of line. So this is it's a very big thing for all accountants. The code of ethics. It's taken incredibly seriously, and you will be required to know it. There'll be a lot more tests within the synoptic area, but we'll go through and we'll see the questions that we're going through. So, AAT Code of Practice, and what I'm going to do in here is I'm going to pull out the professional ethics section out of the Code of Practice. It's worth having a skim through the Code of Practice in its entirety anyway. It's got a lot of useful definitions within it at the start as well. I'm also then going to look at the professional ethics, and I'm going to flick backwards and forwards between both really to try and explain it, but I'm going to give the explanations that will help you understand what it actually all means. And then there's some safeguards as well. Don't tend to see many safeguard questions coming up, but we'll see the professional ethics coming in really. So what we have then is we have our fundamental principles. So here's what we're trying to achieve here. So what should a member be, and how should they? And what we're going to have is we're going to have fundamental principles here, and this is the section out of the Code of Practice, and we're going to have threats to those fundamental principles in here. So you have to act with integrity, so you're going to be straightforward and honest. And again, coming back to this idea of protecting the membership and the standing of accountants in there. Though, if you had a dishonest accountant, then that's going to be a bit hopeless, really, isn't it? You've got to be objective as well, so you can't have this bias coming in, and actually have some kind of level of competence about what you're doing. Confidentiality is going to be a key thing. You'll see a lot of questions on that. If they come up there, and then lastly you have this professional behaviour, the compliance with laws like taxation laws and what have you. Again, is coming back though with really these two are sort of almost combined in terms of, well, if I was allowing my client to evade tax rather than reduce their tax bill, then that wouldn't really be acting with integrity, and similarly it wouldn't be very professional. So that would be, those are the principles, and now the interesting thing then is the professional ethics, so, or the threats to those kind of things. So we've got here, we've got things like what would happen here. I'll give you some examples. So we've got self-interest. So a client comes along and they offer you a holiday if you provide a set of accounts that aren't true. So, or true and fair. So that would be a self-interest threat, because I'm getting something from that. I'm getting some kind of benefit from that. And it would have a go at integrity, and there will also as well be conflicts of interest as well, because that would be dishonest as well. It would also have this conflict of interest because of self-interest sort of idea on here. We'll hold on to undue influence in a second. We'll come through that one in a minute. And also as well, it would be discrediting the professional standing of the sector. So you'll tend to sort of see the concept there about going, well, it's self-interest if there's a question, because it would tend to crawl across a series of other actual fundamental principles that would break. This self-review one here is that you're checking your own work effectively. So a self-review thing would give you a threat, and what that happens is when you check your own work, either you could make a mistake that's not found, which would affect your professional competence and due care. Alternatively, you may now find that there are holes within the framework of your organisation, and you can decide to pay yourself extra money, or get pay your expenses off, or what have you, if you were signing off your own expenses, for example. So these are kind of self-review checks which go against both your integrity, a threat to your integrity, and threat to your professional behaviour. Similarly, though, a threat to your professional competence and due care. Advocacy is an interesting one, and this one needs to be sort of explained, really. You don't often see it come up, although advocacy is actually, together with intimidation, the two more common threats. What advocacy means is that you take up a position, and because the position that you've taken up is so strong, you've the colloquial term would be that you've painted yourself into a corner, so that you've actually sort of taken up a very strong position in here, and there's no real way out of it without heavily undermining your own credibility. So I'm going to give you a couple of examples here. Let's say I went along to a board and I said that the profits for this year were going to be a surplus of £1 million. And I've done that on the basis of my forecast that I prepared, and I actually discover, and I'm very strong in that position, but I haven't really checked out very well. And then later on, I discover that I made a mistake in the forecast, and actually, really, we're not going to make a surplus of £1 million. We're going to make a loss of £1 million. Now, a whole series of decisions would be made on the basis of that, and my credibility now would be shot to bits. So you see, if you're taking up a position, then and it's subsequently proved to be wrong, then my objectivity later on, where I should be saying, well, actually the forecast is now a loss of £1 million, may be compromised. So here we take up a position, and it undermines our later objectivity. Alternatively, we might also take up a very strong position on the basis of a lack of knowledge. So I now need to, let's say I'm now employed as the external auditor to a company. My position is not to actually get involved in management decisions, and not really to undermine the position of other professional accountants. But I'm asked a question, which is, what do you think of management's ability to forecast? And I haven't really reviewed it very well, but there's been a bit of a change in the management forecast, let's say, and they've actually made a lot of money rather than the thing there. And I shoot from the hip and say, well, I know the forecast or the outturn was a lot better than the forecast this year, but similarly, it could have gone quite easily the other way. So you need to really consider management's ability to forecast. Now, actually, in this instance, management might be very prudent in here. I've taken up an advocacy position, a strong position against another professional accountant, and that has actually gone and undermined my professional behaviour, because I shouldn't be able to do that. My objectivity as well. So it's not nearly and also as well my professional competence due care, because I sort of shot from the hip a little bit too much without knowing it. Now, in the professional exams, this would be sort of knocked out of students, or should be anyway, our professional students, because you're constantly asked questions that create balance, that you're supposed to put both the upsides and the downsides, and then say on the balance of probability the answer or the approach should be this. If a student was in a professional exam to simply state a very aggressive position without considering the downsides, there would be a whole series of marks that would be lost, and that would be deliberately make sure that they fail. So this advocacy idea here, which is a difficult concept, I think, for students, of all of the ones, really, this is the hardest concept to understand, is this taking up of a position that is so strong and unbalanced, really, is the key point. It's an unbalanced position in there that subsequently later on, there's a high chance of me being wrong. And because I've taken such an aggressive point of view, then it's very hard for me to get out of that later on without looking like a bit of an idiot, really, and reduce my credibility. So that then upsets my objectivity. Familiarity, then, here tends to come along and is quite close with self-interest, really. And the familiarity is, let's say I'm doing the accounts of my favourite uncle, let's say, and my favourite uncle is going to gain something by either sort of reducing their tax bill or selling this business to somebody else for more value than it's really worth, or what have you. And because of my close personal relationship, I am swayed by that. It's a threat to my objectivity, really. And there was sort of undue influence that comes in here with my familiarity threat. And then the flip side of that, so here we would have to have some safeguards coming in on that familiarity thing, that I shouldn't really be doing, auditing my favourite uncle's accounts. And the last one is the intimidation threat. Now, I'm saying where advocacy is a very high threat in reality, but doesn't tend to sort of have many questions on it, because in reality the professional accountant is continually asked to provide forecasts of where the business is going, and those forecasts are set up a position that may subsequently undermine their objectivity. This last one, this intimidation threat, is also much more common than the questions would have you believe, because the intimidation threat especially for an AAT member, would be a senior manager comes in and says, put that expense claim through, or alternatively intimidates one of the finance staff in terms of saying, listen, just sign off and pay the check, or that kind of thing. And no, I have had that in my life, where I was told to, your job is just to sign the checks, and that wasn't my job at all. It was actually and just simply escalated in at that point the issue. And well, actually I resigned from being a treasurer of a particular organisation on the basis of that there. It saved me being part of the expenses scandals as well around MPs. So that was, as a tip in terms of, should I make a conscious decision to breach my professional ethics in order to gain? No, you should never do that. You will always realise that if you breach your professional ethics for a gain, and you make some kind of conscious decision that you should do it, you actually are a bit of an idiot, to be honest with you, because this will always come back to bite you. You would always be better off following your professional ethics and avoiding any kind of threat. Now, the big one here, though, is the intimidation one here. What happens when a senior manager or the owner of the business or something there, though, intimidates me as the employee to do something that breaches my professional ethics? As an employee of an organisation, you simply escalate further up. So you would just sort of say, yep, that's great. I'll just sort of highlight that to the person above me, and they can sort it out, really. As that sort of avoids a lot of the issues, because usually then they back off after being threatening, and it's quite funny to watch. Or alternatively, it might make your position untenable if you were the professional accountant, let's say, and the owner is requiring you to do something that would be illegal. But there are employment tribunals designed to help in that kind of situation as well. So we've got these threats here, and we can see that these threats here, very much, this is the cause and this is the effect. This is the reason or the issue, and this is the impact. Whatever you want to sort of create on those ones there, though. So one of these here will then create this up here. Now these are threats, so you don't actually have to, they don't have to create these kind of things in here. They are simply threats. But you, as an AAT member, are required to objectively review your position and your threats. And objective doesn't mean I'm just a good poor person and therefore won't do anything naughty. It sometimes means that you need to put safeguards in place, or often means you need to put safeguards in place. If we were in the professional accountants, and so chartered accountants, let's say, in here, things like independence is quite key, and the statement would be not just to be independent, but to be seen to be independent. So actually what you would be looking at in terms of the next bit, which is your safeguards, is that here you're being sort of seen to be protecting your professional ethics as well, and addressing these threats. So we are going through, and what we do, we have two sort of sets of safeguards, really. One which is about the profession, legislation or regulation, right? And they include, and this is a straight copy as well from the Code of Ethics. So we've got our education. You're being trained, but let's say now you've got another bit. You might have a question which is you don't really know anything about tax, or this particular part of tax. You have two options here. Either you can go and get trained, or alternatively you can tell the client that you're not doing it, we wouldn't be doing it. And then that will be one there. So there's your safeguards, your education and training, and then your experience, your continual professional development. So here we're going. We're continuing our professional development once we've trained. So I might, as we've had in this series, just go back and do the whole of a particular unit and explain it all to you as part of my professional development. We then have things like corporate governance in here. This could be things like the combined code of corporate governance, which we'd be following. Things like that, which we would have if I want to have a look at the combined code. That's always useful to have, especially when we're getting into the synoptic. You've got the professional standards that you're expected to uphold in there. We've got some regulators. So we might have things like whistleblowing, whatever, coming into here. We would have environment sort of requirements, some kind of employment legislation, various other sort of things. Money laundering especially would be coming in here. And then we've got this external review. And the external review of reports can be in two parts. It can either be the external auditors providing an opinion on the accounts, whether they're true or fair, or it could also be as well a set of external accountants or consultants who do internal review, which would be known as internal review, where they come in from the outside and they review. Now they don't provide statutory opinions, but they do provide opinions on these. So let's say the workings of accountants of the accounting procedures or approaches. So we've got then these combined and linked together. Then we've got threats to the professional ethics. We've got the fundamental principles, or threats to the fundamental principles. We've got the fundamental principles themselves, and then we've got these safeguards that come in and counter the threats. And you're supposed to look at it objectively, and the higher the risk, the greater the safeguards that you're supposed to put in place. Now you'd also as well have safeguards that are created in the workplace. So if these ones were created by the profession itself or legislation or regulation, these ones are created within the workplace. So you might get a question which would be, what do you do? And you follow the systems and procedures, what you've been set out. So you would have things like systems notes or approaches or sort of authority limits or whatever, and you would follow them. You wouldn't just sort of invent your own approach in there or try to do your work as quickly as possible or what have you. So I don't know. A question might be, you want to go off on holiday, and it's your time. You're not going to be able to do the whole complete reconciliation this month. So one of the answers will be, we'll just try and do as much as we can. Well, it's a self-interest threat to your professional due care and competence in there, and you're not following your procedures. What you should do then is, they'll have some kind of options which will be highlighted to a senior manager that they can't be done within time, what have you. We're going to have things like authority limits as well. Who can do what? So who can sign off for what amounts? Who can sign off expenses claim forms? All those, who signs off for particular orders and invoices and what have you. And within that, you'll have a lot of things called segregation of duties. No, it's not segregation, it's segregation of duties. There'll be an E and a G there, so let's just get that right later on. A little bit of English checking there as we're going on. So segregation of duties, and those segregation of duties will be the way we split the job up into several different people, and that sort of prevents collusion. And if we're going back to the idea of collusion, let's say in here, well, how many of you will have bias and against your or undue influence? Well, 2 or 3 of you all acting in concert starts to get a little bit harder, really. We also as well. I'm sorry, I just missed one as well. Coming back here, you might have a question. Let's just finish this off. So we've got our authority, we've got our segregation duty, we've got our reports and reconciliations. So I gave you the 2 here questions that were more, or the 2 things which were more likely to happen in practice, which were this advocacy position and this intimidation threats. The questions that you will tend to sort of see in AAT will be more along the lines of, you've been offered a free holiday, should you take it? No. Self-interest threat to your integrity and objectivity and professional due care and competence and what have you. Or you'll have some kind of thing where you might have a self-review threat, where somebody's, let's say, signing off something where you can sign off whatever you want to do yourself. But mainly you get this sort of self-interest one here. you've been given a free holiday, or alternatively some kind of family member who wants you to do something else. So that's where you're going to see the typical amounts of questions. You might also see something where, so these threats here, and those ones, because they go across a number of different professional fundamental principles, you won't tend to sort of see these sort of ones in here. You might sort of see a threat that hits one of these. But here, confidentiality is a nice question on its own, really, where you'll be asked the question something along the lines of, you've got a family member who's thinking of joining a business that you're in, or works in a particular department that you're in. They want to know how well they're doing because they've heard rumours of that the company's going to go under, whatever. Or alternatively, that somebody's looking to supply the company, and should I do that because it might go under, whatever. Some kind of benefit that they'll get if you break your confidentiality and provide your long lost uncle with this beneficial information that's going to help them. You're breaking your confidentiality. Alternatively, I don't know, the bank might phone you up as the advisor, wanting to know what the performance is for the year. Well, you don't actually have a relationship with the bank, you have a relationship with your client, and if you gave the bank the information, it would break the confidentiality. You'll sort of see a confidentiality question coming a bit of a mile off because somebody comes along and asks you for, rather than, let's say, somebody comes along and asks you to do, which would be the intimidation threat, with a threat coming along. So those would be our questions, really. We'll tend to sort of see those particular ones. Hopefully that's fully explained our professional ethics. Read through though the accountant's code of ethics, and then just do the questions on it. It isn't, compared to all the other parts of the exam where I sort of give a solid technique and there's no real thinking that's required actually in it, though the professional ethics part is quite interesting, and therefore you'll see in some of the worked examples where I get quite sort of happy or excited about, oh great, we've got a professional ethics question, because I'm now having to think rather than just do a set of T accounts, let's say. Right, into the second part here, we've got our control questions now. So we'll have, just as a quick brief overview of the control question that you'll see in the AAT Advanced Bookkeeping there. There's a very detailed playlist for bookkeeping controls at level 2 that I provide, and really that provides the technique for every single question that you'll have in that AAT level 2 level 2 exam. Now in this one in here, it'll pull together some of these forward. So I've tended to see in the assessments bank reconciliations and sale purchase reconciliations. I've tended to see those ones, but the question approach is a bit different in here. It's very sort of wordy, so you'll see a lot of words in there, and it pulls out part of the reconciliation. So if you went back and looked at the bookkeeping controls videos, let's say if we're in a bank reconciliation question, you'll see that I give it there's 4 stages to a bank reconciliation. For the exam, because you don't have the brought forward bank reconciliation, you go tick, so you tick everything off between the bank statement and the cash book. Then you reconcile the brought forward balances, find what the difference is between those, and tick that off in the bank statement. Then we move over anything that's unticked in the bank statement into the cash book, and then we reconcile the cash book, that adjusted cash book figure, to the bank statement, considering our outstanding lodgements, and adding on our outstanding lodgements to the bank statement position, taking off the unpresented checks, and that'll reconcile our bank statement to our cash book. Now, that's quite nice in a question in bookkeeping controls. There's level 2. Everything's all nicely laid out. We know where we're going. In level 3, what you'll see is it'll tend to be part of it. There'll be one of these kind of things of the tick or the reconcile bit in there. Typically, it's going to be the movement of the of items from the bank statement to the cash book. What are the adjustments that should be made to the cash book one here? Now, it's a trap to only have part of it, and the trap is to try and see whether you'll start thinking rather than just implement your normal technique. So what you should do is, let's say I've got 6 options in here, and which are the options that are items that should be transferred to the cash book. Simply fall back on the idea of, right, is it a tick item in there? Well, that wouldn't be in there. Is it a reconciliation of the cash book to the bank statement item? Well, that wouldn't be in there either. Is it on the bank statement at all? Well, if it's not on the bank statement at all, that's not going to be in there either. So what is it then that's missing, that will be unticked items in the bank statement? Move them over to the cash book. So apply your technique in terms of thinking what it is there. Though. Don't try and just jump in and answer the question. Similarly, the sales ledger and purchase ledger questions are a trap to see whether you will not set out two sets of T accounts in terms of a sales ledger control account and a purchase ledger T account in there, and then consider and actually post the journals to those accounts and see what went on and see what the adjustments should be made. So if you don't take the technique approach in there, you will make this question much harder than it needs to be in there, and are heavily likely to make errors in it. If you do, if you actually apply accountancy technique, and after all, this is an accountancy exam and not a sort of a puzzle test for Mensa or what have you, then you'll make it a lot easier. So that is the controller questions. So what we do now is I've got in the end of this playlist a set of worked assessments. So I do 4 practice assessments and I take you through them at the start. Now in the first couple that I did, I'm starting to get sort of used to the sort of exam format really in here, and then what you'll see in the last 2 is that I even start to have a bit of fun of sort of predicting exactly how the question or the next set of words or what have you. I did all of those practice assessments without looking at them in beforehand, and it was the first set of practice assessments that I've done as well for this particular unit, and so you can see exactly how they work as a student should really approach them. So what we've got then here, and how they're going to help you, well, they're going to give you some revision. They're going to reinforce the professional ethics. You'll see how I sort of explain it very similar to the way in which this is going to go. But also you've got revision for all of the other questions as well. And then you've got exam technique. And this unit in particular does require a very solid exam technique. So if I was to sort of explain exam technique and what I would sort of say, you've got a video as well as at the start, which will go in at the start of this playlist, which will be how to pass this exam. There will be particular things like the use of timelines, the way in which T accounts are going to be put in place, the different coloured pens and highlighter pens that you're going to use. So it's going to really give you a very solid exam technique, and that exam technique on its own is going to be worth at least 10% to you going through. So hopefully that is the whole of this unit now, with then 4 practice assessments coming up. Good luck for the exam. I hope you've enjoyed the playlist. Thanks for listening.